Hi, Norman Hallett here with your next 4-minute drill for traders. Let's talk about choppy markets because there certainly are a lot of them lately. I'd like to give you a tip that has served me over the years when I encounter periods of chop in the market, which happens to be about 75% of the time. So this is important stuff. Let's start with the reality that most traders, you and I, are here for the big move. And when we see a choppy market, we tend to view it as an accumulation, and then we look for a breakout one way or the other to put on our position to ride it for the big breakout or the big breakdown. That's all well and good, but since at least half of the breakouts or breakdowns are false breaks, then the strategy of waiting, and then jumping on a trade when it breaks the price accumulation range, well, it can be a dangerous one. I'm not saying that it's not worth following that strategy, because it is. As long as you're quick to limit your false breakout loss to a small one, because when it finally does break out, you'll get all those small losses back and hopefully more. But I think there's a better way. And that way is to honor the chop. Sell near the top of the range and buy near the bottom of the range. If the market breaks out or breaks down, have your close stop in to limit your losses, but I think you'll find that you'll get a lot of nice up and down rides before it breaks the range. And when you're a little more experienced, you'll learn that in some markets it's best to make that stop order a reversal order, so you go with the breakout when it does happen. If you're going to attempt to gather profits from chop, then do two things. Take a close look at the history of the market or the stock that you're trading. Look back and see how many times that particular market usually chops up and down before breaking out. Find the average number, the minimum number, and the maximum number of up and down chop movements before it breaks out. If you trade between the minimum and average, you'll have a higher probability that your chop advantage trade will be a winner. Once you get past average, reduce the number of positions you trade, because the odds start to slide against you that the chop will continue. So do two things. Study your market for its chop personality, and then adjust your position sizing as I've suggested. And I think you'll be glad you stopped looking for the home run, which is the breakout, and started taking advantage of what you see, the chop, and not what you feel, waiting for the breakout. Okay, that's it for this edition of 4-Minute Drill for Traders. Did you like that trading tip? Was it too simple and uncomplicated for you? Did it make sense? Would you like me to pass on more of what I've experienced in my 30+ years wrestling with the market when it comes to these convenient kinds of trades that I've seen win over time? If so, let me know what you want to hear, and I'll get to work on it right away. So until next week, stay disciplined.